Good morning. Thank you for joining me. I'm Rashawn Gidwani, Phillip Capital's media host and presenter. Welcome to the Daily Morning Note. U.S. equity futures rose, and Asian stocks look set for a muted start Wednesday as traders weighed Federal Reserve Chair Jerome Powell's comments that officials should consider a faster removal of stimulus. Australian shares slipped, while contracts for Japan and Hong Kong pointed to a cautious open. The S&P 500 slumped almost 2% overnight, and measures of equity volatility jumped on the prospect of tightening monetary policy. The gap between yields on 5-year and 30-year U.S. Treasuries shrunk to the least since March last year. Powell said the next Fed meeting should discuss whether to wrap up bond purchases a few months earlier and retired the word transitory to describe high inflation. That could open the door to earlier interest rate hikes. Money markets show close to 60 basis points of increases priced in by end 2022. Powell's pivot came on top of worries about growth threats from the Omicron virus strain amid a rift over the efficacy of current vaccines. Crude oil paired a tumble, and gold held the drop. In Singapore, Keppel Corporation on Tuesday, November 30th, addressed fresh queries on the attractiveness of its final offer for Singapore Press Holdings, SPH, as the day for shareholders to vote on the offer draws closer. In response to questions fielded by the Securities Investors Association, Singapore, or SIAS, Keppel said its decision to waive its right to walk away from the offer is a deliberate decision to improve the attractiveness of the deal amid the bidding war with Cascaden Peak. In dropping the material adverse effects MAE clause, it eliminates the risk of Keppel walking away should SPH's financial condition worsen. The clause remains in place for Cascaden's bid for SPH for now, and its waiver will take effect only from the date its scheme document is dispatched. Next up. The Straits Times Index, STI, saw its largest single-day decline in a year on Tuesday, November 30th, falling 2.5% or 79.29 points lower at 3,041.29. Decliners outnumbered advancers 338 to 172, with 3.22 billion shares worth Singapore dollars 3.89 billion changing hands. Most Asian markets were in the red as well, as uncertainty remained over the impact that COVID-19 variant Omicron could have on economies worldwide. Japan's Nikkei 225 index fell 1.6%, South Korea's Kospi tumbled 2.4%, and Hong Kong's Hang Seng index fell 1.6%. Meanwhile, Malaysia's Kuala Lumpur Composite Index was up 0.2%, and Indonesia's Jakarta Composite Index fell 1.1%. Next up, Comfort Delgro Engineering, a wholly owned subsidiary of Mainboard-listed Comfort Delgro, has entered into a second joint venture, JV, with ENGIE Southeast Asia to develop and manage solar energy solutions. Through JV company Comfort Delgro ENGIE Solar, both sides intend to electrify Comfort Delgro's fleet of vehicles with renewable power and offer fast charging solutions to drivers and public electric vehicle EV users through renewable energy assets, the transport operator said on Tuesday, November 30th. The Solar JV comes 2 months after the two companies' first venture. Comfort Delgro ENGIE won a tender to deploy 479 EV chargers across Singapore by the third quarter of 2022. With a target to operate by the second half of 2022, Comfort Delgro ENGIE Solar intends to first install and operate rooftop solar panels atop 3 buildings at Loyang, Pandan, and Ubi, operated by Comfort Delgro Engineering. Next up. Manulife US Real Estate Investment Trust, Manulife US REIT, announced on Tuesday, November 30th, that it is acquiring three properties in the United States for US dollars 201.6 million as it increases its exposure to high growth markets and tenants to drive returns. Jill Smith, Chief Executive Officer of Manulife US REIT's manager, said in a briefing on November 30th, having built our trophy and Class A traditional office portfolio painstakingly over these last few years, from today we are embarking on Manulife US REIT's next phase of growth by entering into the Sunbelt city of Phoenix, Arizona, and the magnet city of Portland, Oregon. We're positioning for growth through these accretive acquisitions. The three acquisitions will propel exposure to high growth tenants, especially in the tech and healthcare sectors, she added. In the U.S., the U.S. Department of Justice on Tuesday ended a criminal case against Societe Generale SA related to violations of U.S. sanctions after the French bank agreed to pay U.S. dollars 1.34 billion and met the terms of a 3-year deferred prosecution agreement. Societe Generale agreed to the payment in November 2018 to resolve federal and New York state claims that from 2003 to 2013, it handled billions of dollars of transactions for parties associated with countries subject to embargoes or sanctions, including Cuba, Iran, Libya, and Sudan. U.S. District Judge Kevin Castle in Manhattan on Tuesday signed an order in which the Justice Department said it will not now proceed with the prosecution of Societe Generale because the bank complied with its 3-year agreement. Next up, U.S. consumer confidence decreased to a 9-month low in November as accelerating inflation and a pickup in COVID-19 cases weighed on Americans' views on the economy. The Conference Board's index declined to 109.5 from a downwardly revised 111.6 reading in October, according to the group's report on Tuesday. Economists in a Bloomberg survey called for a drop to 110.9. Expectations about short-term growth prospects ticked up, but job and income prospects ticked down. Lynn Franco, Senior Director of Economic Indicators at the Conference Board, said in a statement, concerns about rising prices and, to a lesser degree, the Delta variant were the primary drivers of the slight decline in confidence. Next up. The wave of price increases that has complicated the U.S. pandemic recovery could last longer than anticipated, Federal Reserve Chair Jerome Powell acknowledged on Tuesday, opening the door to raising interest rates sooner. It was a distinct shift by the central bank chief, who for months tried to assuage fears by saying the inflation spike would be transitory, and pledged to be patient before raising interest rates. The uptick in inflation has put pressure on Powell and become a political liability for President Joe Biden, who is pushing a divided Congress to pass a massive bill improving social services and fighting climate change. Next up. Oil prices tumbled on Tuesday after Moderna's chief cast doubt on the efficacy of COVID-19 vaccines against the Omicron coronavirus variant, spooking financial markets and heightening worries about oil demand. Crude futures ended November with their biggest monthly decline since the outset of the pandemic, as the new variant, along with expectations that coming emergency reserve releases will juice growing supply, has cut the legs out of the market's year-long rally. The head of drug maker Moderna Inc. told the Financial Times that COVID-19 vaccines are unlikely to be as effective against the Omicron variant of the coronavirus as they have been against the Delta variant. Brent crude futures fell US dollars 2.87 or 3.9% to settle at US dollars 70.57 a barrel after hitting an intraday low of US dollars 70.22, lowest since August. US West Texas Intermediate WTI crude futures ended US dollars 3.77 or 5.4% lower, US dollars 66.18 a barrel. The benchmark dropped to a session low of US dollars 64.43, also its lowest since August. That's about it from me. Thank you.